Okay, we are live, and with three of you, I'm starting. So let me just quickly give you a recap of the last Friday presentation, which was part one on finance for doctors, choosing the right kind of loan for all of you, for doctors especially, or dentists or healthcare personnel. So what we discussed in that, after the usual pleasantries, we discussed what exactly does a loan consist of, what are the components, the principal, the rate of interest, the tenure, can be from a banking and a non-banking institution, and then why loans are a necessity, and how do the how does the social media marketing help in carpet bombing the potential customers for loans. Then there are various products available by various companies and banks, the non-banking financial companies. Everyone has a differentiator, as we discussed in the value creation today morning. Some promise fast dispersal, some have low rates, and HDFC is known to disperse in less than 10 minutes. So they are actually, or even less than 10 seconds for for its net banking customers. So that is the kind of options they give to the industry. Of course, there are tax benefits on loans like home loans as well, on both on the principal and the interest component. Then we discussed about the types, secured and unsecured. Secured, of course, being the ones which need a collateral or a security. Unsecured are the ones which don't need any collateral as such. So similarly, depending upon the payment period, revolving or term loans, like the credit card loan, which is a classical example of a credit card, which a revolving loan. So then different types of loans, which we will discuss: home loan, car loan, education loan, personal, business, gold, of course, doctor's loan as well. Then the different components of loan we discussed: the income component. What is your income criteria when the bank decides you whether you can take up the loan or not? The age criteria, the down payment you pay, the tenure part, the interest part which is to be charged by them, and the EMI which actually happens at the end of or at start of the loan period. Then why do we take a loan? For different goals in our life, for urgent requirements, or maybe hospitalization, many other reasons. So what are the factors we need to actually consider before applying for a loan? Our credit score or civil score, which has to be optimally above 750. The rate of interest, which can be payable easily back by you. Then processing fee and other charges, we'll discuss those things today, of course, in detail. So eligibility, the documents required for the loan, basic part, and how to apply for the loan. We all believe that it is a very difficult process. These days, it is easier to apply online as well. Then I gave you a few golden rules, the 10 golden rules for borrowing, which we have to keep in mind before taking the loan. Don't borrow money more than what you can repay. It is the golden rule, age-old classical golden rule given to us by our elders in our life, even before the loan system started in this great deal. Earlier, there used to only be a loan called as a home loan, maybe a couple more, but not this number of loans which are actually existing. So how much I gave you the examples of a few colleagues, and the basic ratio, normal, it should not be more than 50%. I put that number at 40%. Ideal ratio is 20 to 25, because what that can do is, actually, if you're paying huge percentage of your uh, take home salary as a loan, you will not be able to actually enjoy life in present, and you are actually making the bank rich only by that reason. So the net worth would be still negative in those case. So as I said, 20 to 25 is the ideal ratio. Anything beyond that is a cause of concern many a times. So keep the tenure as short as possible. We all know that if the tenure is in decreased, we can even come out to almost half of the say borrowed amount. I showed you the figure that if the interest loan is decreased, you get down to at least 57% as well. Then Similarly, you increase in percentage of the interest part as you go on increasing the time period. Of course, if the loan is not bigger and the amount is not bigger, especially usually it is for a home loan, then you may not be having any loss in that. But if the amount is also bigger, the time period will actually entail that you will be giving back more of interest part. So all those, so we always consider those situations. So how you can pay a 20-year loan in 9 years. I gave you the scenario that you can actually reduce your EMIs by even 10%, or the loan, or sorry, if you increase your EMI every alternate year or every second year, you can decrease back your 20-year loan in less than 10 years itself. So then we all have to ensure timely and regular payment. We should not be missing the loan EMI because it ultimately impacts our credit score. So rollover credit for usually is their revolving balance, as I said. So we usually pay the minimum 5%, but then we eventually pay the interest. Of course, sometimes it does not affect the CIBIL, but in many cases it does. So then don't borrow to invest or spend unnecessarily or splurge. This is one of the basic rules of investing and spending. So usually people used to take a loan and then buy home loans or then buy a property because real estate used to appreciate a lot. But ever since the demonetization exercise happened in 2016, November, 8th November 2016, the real estate is down in dumps, and it is not unorganized sector, especially, which was the, say, very favorable investment, especially for doctors, is now down. Organized sector is still growing, not that lucratively, but still at a decent pace, it is growing. So now the home loans are still around 7.5 to 9.5%, but they are decreasing otherwise. So then it is not a good idea to take a personal loan for buying your unnecessary spendings. I gave an example of a colleague in Mumbai who actually forego foreign tour and then actually use the payment to down pay their home loan installment. Then don't buy insurance with the sorry, do buy an insurance with big ticket loans. We discussed about a term plan. Usually the banks will guide you themselves only. That the similar kind of a thing is, you don't buy a reducing term credit plan, buy a average normal term credit plan, because it had so many advantages, as I showed in this chart and explained you in detail in that. Then keep shopping for better rates. We all know that the rates keep on changing, especially if you have opted for a floating rate. You will actually be advantageous if you feel that the current time or the future time is going to actually reduce the rates, and the same would be applicable or applied by the banks and will help you, of course. But as a golden rule, minimum of 2% difference is there, because switching has its costs, and sometimes if you have more EMIs remaining and the difference is 2%, you will be beneficial. But otherwise, not at all. And understand the fine print. People don't read the documents, and they actually end up in the problem. Sometimes they are deducted the interest part, the premium part, which are already by default included in that. So then those things are all mentioned in the plan, but people actually don't bother to read. Then do substitute high cost loans, because high personal loans should be, say, replaced by lesser cost loans. So we need to make sure that we are not paying unnecessary interest to our bankers. Then, because the loan becomes costly, so replace it with the similar percentage. Of course, when we discuss the various types mentioned in the chart, we'll get to know what exactly it is. So then loan against property, loan against securities, we discussed those things a bit. And we know that even mutual funds, stocks, shares, securities, all those can be used as a collateral by the banks. And then we always uh, like to keep the home loan especially running because of the tax benefit. We have to look at the overall benefit and overall returns and overall interest that we pay, and not only at the tax benefit part. So then don't nix your retirement by avoiding loans. Do not dip into that, because we are emotional about our kids' education, kids' marriages, and all those things. So do avoid that, dipping into your retirement corpus, because that corpus is meant for you. You're not going to have any pension. You need to remember that. And keep your family in loop, especially your spouse. We all saw that housewives took out huge sums of rupees from their closets when demonetization happened, and those who are without the knowledge of the husband. So if you're going to take a loan before, discuss that in the family, because maybe your spouse has an alternative arrangement already for that. So then this all will actually help you to avoid the loan. So we ended our presentation on this image, because we might have been confused at what exactly to be done next. What are the further plans? So this is a quick recap of the previous presentation. So I'll be starting with part 2 now. And in the next part 3, I'll be giving you a recap only of part 2, not of part 1. So I hope you understand. Okay. Is the screen visible now, and am I audible clearly?
Yes, sir. Visible and audible.
Thank you. Welcome to part 2, choosing the right loan for your needs. What exactly are the parameters that we also need to look in apart from those 10 factors? And what are the various kinds of loan? Again, the presentation might be long, but I'll stop approximately 1 hour, 10 minutes from now, depending upon what topic I'm ending. Whatever is the closure at that point of time, I'll stop at that time, and then we'll continue from that part in the next presentation. So, as usual, all my presentations will begin with thanking the Lord Almighty, who's given me much more than what I deserve. And when it comes to finance, I have to thank my dad. A big portion of the loan part is courtesy my dad only, and because he was a specialist in loans and advances section in his bank. So this is my brief biodata. You are all aware of it. So we are discussing the loan basics. So this is webinar number 13 of 2021 of the mini paid group, starting from 19th Jan going up till 30th June. 30th June would be the last day of this group. So the loan basics part 2, choosing the right loan for your needs. We all we all know or have a terminology that we want to clarify: fixed rate versus variable rate, or fixed rate versus floating rate. One and the same thing. So in the fixed rate, the loan interest rate remains throughout as per your deal, irrespective of whether the rate of interest increases or decreases in future. But in floating, it is actually or variable, it is sometimes based on economic index. In the floating, it is based on the RCI base numbers, and the MCLR numbers, the rate lending rate, which is decided by the bank, actually is a big criteria in deciding that what would be the floating rate percentage in that. So sometimes you have a higher one, sometimes you have a lower one, but fixed rates are consistent and you can budget easily for them. But floatings are unpredictable. Sometimes you win, sometimes you lose, but ultimately sometimes you have to pay more as well, but you get advantageous as well sometimes. So it is a lottery system many a times. So we finished our presentation in the last session on Friday. This is the reason I actually wanted you to have a session on Monday only, before you, rather than putting in a week, because it puts in a lot of gap and many things have to be recapped very strongly. And finance is not thing that practice management might be still clear by a quick recap. Luckily for you guys, the video was there in MPG group. I'm not sure how many of you watched it. Already, only 5 of you are here currently. So I'm not sure the loan topic is appealing to many. But then जब question queries में आते हैं तो मेरे को वो लोग वही question पूछते हैं, which I am answering over here in depth, in detail. And sometimes people ask me, नहीं नहीं मेरे को वो उस एक चीज का answer चाहिए, and you don't get it. You have to, and I'm not the one who actually likes to spoon feed. I always believe in telling the basics and telling the whole concept, so that you can use your own top floor to get at the desired answer. So let's begin ahead. So at least by now we are clear that what exactly are unsecured loans and secured loans. So unsecured loans are the ones which are offered without any security or any collateral. So they are processed fast, but then they are based on your CIBIL score or credit history. Personal loans and business loans are a part of that. Even doctor's loan is a part of that also. So then secured loans, where you have to pledge a asset. It can be a longer tenure as well than the secured loan. And usually if you're pledging an asset, credit history should not play a role. But if your credit score is too less, it might affect your interest percentage sometimes. Home loans, loan against property, loan against securities, loan against gold, loan against mutual funds, loan against stocks, all those things can be actually uh, part of your secured loan segment. So we all believe that seeking a loan is not difficult. Bank तो तैयार बैठे loan देने के लिए. But what kind of loan to pick? You have to understand that ये नहीं है कि अगर आपको clinic के लिए loan चाहिए तो you buy a personal loan. You can have a doctor's loan as well. But then similarly, if you need something for your kids' education, you don't pick up the doctor's loan also. You have an education loan separately because that comes with a tax benefit as well for 8 years also. So similarly, what kind of loan to choose and all those things are actually very important to choose. So that is the reason of this session, because you are asking me, sir, is loan mein main ye le lu? You have already jotted down on the loan. And my concept is to tell you why this kind of loan, why you need to pick up this kind of loan, because that is the most important criteria. If there are 4 roads, one goes to Amritsar, one goes to Lahore, and one goes to Firozpur, and one goes to Delhi, you need to understand that where your destination is. If your destination is Pakistan, you can't be on the road to Delhi because that will be opposite. Similarly, if your destination is kids' education, you can't take a personal loan. You have to go for an education loan because there are so many benefits in that. Then that is the reason we need to understand our situation, what we need actually. So then take care of a few points which are important in this regard. Let me discuss those 5 points primarily. What is your need? We need to understand the sense of our need. What can be? It can be our business requirements, it can be personal requirements, it can be hospitalization. But once you are able to establish the need, you can then zero down on your loan part. Because sometimes you need a machinery, you can have a temporary shortfall in cash. Then you need to pick up the right product which is tailor made for you. Obviously, you don't fill a acrylic in a class 1 cavity. You either fill a composite or a silver. Of course, silver is still outdated as well, but you don't fill acrylic in class 1. So you need to pick the product which is tailor made for your requirements. So that again decides the amount you need to pick up. जितना आप बोरो करेंगे, you remember, उतना आपको इंटरेस्ट वापस देना पड़ेगा. So you have to be very judicious. Not that आपकी लिमिट बैंक ने अगर 20 लाख दे दी है तो you have to borrow 20 lakhs only. If your requirement is 5 lakhs, use that 5 lakhs. But be very judicious because you have to understand your own requirements. You have to be a good judge of your own situation. Without need, you borrow huge sums. You need to pay by the principal and the interest and the other charges as well. What are those other charges? We'll be discussing those as well. So here comes the point. The cost associated with it. We always see the interest part. We never see the total APR along with it. The APR is what is actually important to us, because loans are not free. Banks will charge a processing fee, sometimes an application fee. So there are a host of other factors as well. I'll show you the list in various images which are attached along with. So people actually compare the interest rates. They should be bothered more about the APR. Banks will declare their APR every quarterly usually. So ask what is the APR, because APR is the real cost of loan, the annual percentage rate, which includes your interest rate, processing fee, the origination cost, or the loan application fee. This is the formula for APR. Fees plus interest divided by principal, the whole amount divided by the number of years into 365 into 100. That would be your APR. And it is a customized thing. Like many things, it is also a customized thing. It is not a fixed thing. Somebody having the same situation, but maybe a lesser amount and a lesser or maybe more tenure will have a different one, APR. So APR is surely higher than the interest rate. You may be getting a loan at 8%, but your APR might be 9.2 overall in totality. So you are actually paying back on the basis of APR only and not on the basis of interest rate. But then some loans are available on floating rates interest or reducing interest as well. Then you need to understand that variations आएंगी. This is a lottery. You will win some, you will lose some. People who actually took loan last year in Jan or Feb, thinking the beautiful predictions about the growing global economy or the growing Indian economy. Indian economy is pegged to be amongst the top 5 growing economies of the world, which is a great thing for all of us. But then COVID struck, and people who had taken a fixed percentage, they are actually paying back more because the interest rates came drastically down. The FDs came down to 5.4, and so did the home loans, and so did the other loans as well. Because banks, the lending rate was decreased by the RBI, so banks had more surplus cash. So either they pay interest to the RBI for holding more cash, or they pay or they lend it to people like us or any borrowers who can utilize that money and pay them back the interest, which is of course higher than that. So if you took the loan last year or 15 months back, you are actually paying back more in today's times than what you had envisaged. And floating rates change every quarter as the RBI announces the policy. Sometimes there is no change, then there is no change in bank rates as well. But if the economy is going volatile, the interest rates change every quarter, and there is say good chance that those can keep the loan interest part turbulent. So then there is a prepayment penalty as well. Some have that. In floating interest rates, there is usually not such penalty because those keep on varying. Then you need to inquire your bank. The foreclosure charges vary from 2 to 5, sometimes as high as 6% if you want to actually pre-close your loan. We discussed that in the previous session, part 1, that interest rate difference should be minimum 2% before you decide to switch over to any other lender. So then if you are buying a home loan, there are expenses like stamp duty and other government charges or statutory charges, which can actually increase your total cost of borrowing. So there might be hidden costs. Bank might be already getting some deduction on the interest part at the start only. So you need to be very, very aware and awake about the whole scenario, about the whole charges. Don't look at the interest rate, look at the APR. So then the tenure. Tenure is one of the most important part. We need to understand people who took loan for 1 year or maybe 2 years. We all know what is going to be the scenario till the end of the year 2021. Practically less of earnings, and practically a scenario where we are not actually going to get those much returns that we had thought of when even the COVID struck in India. So then if you need a loan to get a temporary cash crunch, you can consider a loan of shorter duration. You will pay minimum interest, minimum amount in interest, but then if you want to expand your business, which is a rarity in today's times, nobody will think of doing it till the COVID situation say is subsided totally. We will not be thinking of growth and expansion, and that is where we need to think of those parts. So what are the short term loans? Anything from 6 to 18 months, and in anything not less than 3 or maybe beyond 3 are usually long term loans, and the period between 18 and 36 months is known as medium term loans. So medium term loans are not very common. Either short term loans are the ones which are in picture, or the long term loans which are in picture. The short term being the personal ones, the personal loan, the gold loan, the loan against securities. But the longest ones are the home loan, education loan, loan against property, or loan against your assets. All those things we'll be discussing. So choose your tenure wisely depending upon what you need to pay. Sometimes people will actually, as I gave you an example in last session about a friend whose 72% of the earnings actually went of his take home income went in paying back the EMI. So his net worth was actually zero, because in 28% which is left, it is very difficult to even survive in any kind of city. If whether it is a tier 1, 2, 3, 4 city, it is very difficult to survive with 28% of your income. So don't overstretch yourself in a desire to pay back loan as early as possible. Of course, the desire is unique, but then you can't cut corners from everywhere. and you have to be prepared for any kind of eventualities. If there are any problems which come unannounced, they can actually make you go into that loan zone again. So think accordingly. Banks will give you different tenure. If you want to keep your EMI low, you can go for larger tenure, but then you will pay back more of interest. If you keep your tenure less, you will pay less interest, but EMI will be high. So again, this decision has to be taken by you. As I say always, you understand your unique situation better than anyone else. So if you can actually pick up your situation, decide your situation best, I can't really do that on your behalf. So then a total amount owed should be the one which should be looked at, because the APR will give you that percentage. So that amount is equal to total loan amount plus interest and any kind of fees and charges. So usually fixed or floating, the total amount is the total is the amount that you owe to the bank in those regards. And if you are not bothered about the EMIs actually say stretching you financially, you can go in for the least possible amount of the loan. Especially it is done when people go in for a car loan, because if they buy a car on cash, you get an income tax inquiry the very next week. But if you buy on loan, nothing happens. People take a car loan, pay it back in 2 years, and they know that they have a regular flowing income, which they can already take care of, and they are over with the shortest tenure, avoid the income tax inquiry, and pay back very little of interest, and don't overburden themselves. This usually is done by majority of people, because CAs also advise this thing: car leni hai loan pe lo, mat lo cash pe. So then it does not mean that they are giving you the right opinion. You can buy if you have assets, if you have the bank balance, if your books are strong, you can buy on of course not cash, I mean by your through your digital mode only, because anything above 20,000 is not allowed to be paid as cash for such purchases. So if you can buy in one go, there is nothing wrong. If you have the source to show for it, you can go for it. Those are the things of the past when the bank balances used to be on the lesser side. Okay, then the fourth part is the process and the documentation. Sometimes it is one of the most tedious processes. The standard application form and so many documents are needed. So we discussed those document list in the last session. So many banks would need a different kind of documentation, but then it is the most common ones are the KYC documents, the PAN, Aadhaar, address, and then for your good standing, they need the balance sheet, the profit and loss account, along with your income tax returns. And if you are a trader, of course, not applicable to dentists, then they will ask for your audited GST returns as well. So some banks will ask for a bank statement also. Some will buy actually, if you're buying it for a loan to buy machinery, they will require an invoice of the asset to be purchased as well, or a quotation from the buyer as well. Sometimes quotation from the seller, sorry, as well. They will need that to be on the firm ground, because they want to make sure that you don't run away with the money. Of course, it is their money; they need to be very assured. And RBI rules are very strict regarding loans, especially. There are a lot of guidelines which the banks have to adhere to. They still don't have any control over the interest rates. Of course, the banks keep it in sync with the lending part, because as soon as the RBI rates are announced, the first bank to alter its rate is the SBI, the State Bank of India. So in a yield to run with the competition, the private players also reduce their interest. If the SBI will not reduce their interest, the private players hardly will have an effect of the in that regard. So the control is not because of the RBI norms, but because of the competition amongst the say private players and the government players involved, especially the SBI, which is the biggest lender in the banking segment. So what I mean to say is that the RBI has not given a tab on the interest they can charge. They can charge any amount of interest, obviously with the prior information that they do always, and that is why we sign over there. But apart from the dotted line, or apart from what I mean to say, the interest, all other norms are the ones which have to be very strictly adhered to, especially when it comes to documentation, especially when it comes to the valuation part, the loan to value ratio, or the document or the amount that is to be submitted. As I told you in the last session also, there'll be a few slides on that in this also, or a point here and there as well. So you always need to understand that your relationship with the bank or the lender will make a difference. If you are already having a bank, if you're already having a good service relation, your loan is most likely to get approved faster because the manager will himself push for it. Remember, for bankers, the loans are the primary source of income. So every banker would want, be it a manager or a deputy manager, they will want that they actually sell out more loans. Of course, not to everybody, but to the ones, those who trust them with their books and trust them with their credentials as such. So if you know the banker, you are more likely to get a favorable deal. Those already know you. So then the next question after these 5 points that we have to keep in mind is, should we buy the loans online? Because we get a message on our net banking every now and then. So should we buy it online? Can online loan portals offer us a better deal? Let's see. So always compare the lenders before you actually go in for a loan, because this is very easy. Courtesy Paisa Bazaar, Policy Bazaar, all those websites, they offer you a comparative status on the interest rates being charged. You can compare all those, and convenience and the wider choices are not the only benefits, but online process is simpler and faster. The loan offers can be generated in a minute, and an online approval sometimes will take less than 5 minutes. I told you the example of HDFC in last session. HDFC is known as the Usain Bolt of personal loans sometimes, especially if somebody of you has a HDFC bank account, if in your net banking you will see the last tab on the top when you log into net banking is the offers. There are so many pre-approved offers in there, and there is very less documentation involved, especially if your KYC is complete. And the private banks make sure that every 2 years they get the KYC from the customer, which is like kind of a life certificate only, that the customer is alive and is actually not, this account is not being misused by the family member. So they actually, these portals will provide guidance via telecalling also, or they will guide you to the concerned person. So people actually sometimes want that. Sometimes you need more than a just a interest rate comparison. You need to understand that what is the whole process, how it's going to take. And sometimes there are relationship managers, those who actually will guide you through the whole process, the including the documentation part. And private players are actually specialized in such kind of acts. So usually that is the reason the online portals are also getting favorable, especially the ones which are actually by the private players on the net banking. So you can get a better deal. People claim that you can get a better deal if you approach them directly rather than through the third parties like Paisa Bazaar or a Policy Bazaar. But then verify those claims always, because कहनी और कथनी में बहुत फर्क होता है usually, especially when it comes to money. Always have a double check. So there are a few pitfalls also. Services are free, but then your data privacy is an issue always. We always wonder, यार मेरा बैंक को नंबर किसने दिया, मेरे को मैसेज क्यों आता है, मेरे को कॉल क्यों आते हैं. All of us get it. So that is the reason actually they will harass you with the, or carpet bomb with offers and all those things many times. So this was the basics about the loans. So let's now delve into the deeper parts. What exactly are the types of loans? And the question arises, which loan will suit us more? So when I tell you the pros and the cons of each loan, you, and of course a few comparative analysis, you will get to a figure that yes, this loan is better for me. So what are the basic loans available? Personal loan, home loan, vehicle loan, can be car loan, two-wheeler loan, loan against securities, loan against property, agriculture loan, gold loan, overdraft for businessmen. So there are so many things. Apart from that, a doctor's loan, and a lesser known one from the government of India, the Mudra loan. So let's first start with the personal loan. Personal loan is one of the unsecured loans, comes without collateral. So let's discuss this. So this is one resource, or say we always turn to when we have sudden expenses falling in, and we have not saved for our rainy days, the emergency fund, which is supposed to be there. We have not done that. So the option for us is personal loan, or maybe our income is not that great that we can save every month sometime. So of course I can't say that for doctors. Majority of us actually have good income, and we can save a good amount, but our habits are reckless sometimes, which make us do that. So it is the lack of vision for this scenario that leads us to unexpected expenses, and we don't have any money for it. Then this is one of the easiest loans to apply. No collateral required, no security required, and personal loan sanction as early as 24 hours. Sometimes in pre-booked net banking offers, you can get in even less than 5 to 10 minutes itself. So the major is benefit is that आपने कहाँ पैसा खर्च करना है, the bank is really not bothered. It can be for any financial obligation like a wedding, like an emergency payment, maybe for a vacation. Of course, a wrong thing to do, but then you can use the funds to meet any need. The bank does not really mind. The bank really doesn't bother. They're only bothered about is their EMI, which has to be on time. So only pick up the personal loan which you feel suits best your needs. So there are a lot of competition amongst the, say, lenders or the players, the private and the government players. So there are too many things to think about. So we all know this doesn't require a collateral. So what are the charges associated? And personal loans can start from 10.65 and go up to 21%. Processing fee average is 2 to 4, but can range from 0 to 5%. Yes, there are many personal loans with 0% processing also. So then the type of interest rate can be both fixed or floating, depending. Loan amount minimum usually is 1 lakh, and the loan tenure usually is minimum 1 to 5 years. The pre-closure average 2 to 3%, can be 0 to 4 as well. Again, this also can be 0% as well. The pre-closure or the foreclosure or the prepayment charges, as we can say, different ways. So, sorry, what are the particulars? For the salaried, the age limit 23 to 58, self-employed 28 to 65. The income minimum for a salaried is 25,000. Minimum turnover, as I said, is 40 lakhs, but then this number is subject to your balance sheet. If your assets or your, say, balance sheet shows good amounts of assets, then this thing is usually overlooked. But then the most important criteria for a personal loan is your CIBIL score, your credit history. It has to be above 750. There is no compromise on that regard. So the two best features of a personal loan are easy availability and processing, of course, and the minimal documentation. Sometimes even your net banking documents, or say your banking relationship with the bank, is good enough to suffice for your documentation in that regard, because the bank is not asking for any collateral. Their collateral is served by the CIBIL history or CIBIL score or the credit history. So they're really not bothered where you spend that money. So they won't be asking for major documents for your property and all those things, since it is an unsecured one. So what are the major documents required? The application form with photograph, which is common both for self-employed and salaried. KYC, identity and residence proof. The last 6 months bank statements. The processing fee check separately taken. Then latest salary slip and proof of business or the computation of income for the self-employed. Form 16 for the salaried, and the previous 3 years ITR or the profit and loss, and the balance sheet along with the computation of income sheet for the self-employed. They don't require a collateral, but they still require a document sometimes, which are usually, say, out of these, the majority things are there already with the bank. You only need to pay this 3-year ITR to them only. Some banks ask for 2 years. So banks will always try to keep it within competition, especially the private players. They keep in sync with the State Bank of India and whatever the state bank is. So the average interest rates by different banks are displayed. HDFC 10.75, Standard Chartered 11 onwards, Kotak 10.99, ICICI 11.25, Yes 10.99, and State Bank 10.50. Of course, these keep on changing, but yes, they all will try to be in sync or in close to the. It will not be there that the SBI is having 10% and the HDFC will have a 15%. which is sometimes not possible. So then what are the fees associated with the personal loan? So processing fee, late fee payment charges, check bounce charges, loan cancellation, service tax, all those things. So processing fee usually 1 to 3%. As I said, it can be from 0 to 4 as well. But some banks will give you a limited time period offer, as we do in our clinics, scaling free, X-ray free, checkup free. We all do all the. So banks also have, the government banks will sometimes have a loan mela kind of a thing. They actually advertise that we are having a loan mailer where they disperse faster loans with minimal documentation, or maybe faster turnaround time in those situations. HDFC and Standard Chartered 3%, Kotak 2.5, I say 2.25, State Bank 1%, Yes Bank 2.5. All those banks will actually try to be in sync with the, but then processing fee is something which the banks believe that they have a right to charge, just like our consultation fees. So you need to pay that surely. So how to choose the right personal loan? The topic of our presentation was how to choose the right loan, but within that a subheading, how to choose the right personal loan. Because the lender, like the bank or the NBFC, will look at your income, your CIBIL score, the amount you are asking for before deciding. Because if it is all of the above is not very positive or favorable, the interest rates will be higher from the bank side. And because they may give you with least paperwork, maybe a lesser turnaround time, but they will charge a higher rate for a higher risk and the convenience they offer to you. So a few things you need to consider before applying for the personal loan as well. Of course, I told you separately as well, but a few things which vary in personal loan. So since we all know personal loans are unsecured, you need to choose between a fixed or a floating interest, depending upon the bank. In today's scenarios, you should pick a floating rate, not the fixed rate, especially if it is for a shorter duration. Then the penalty charges. Banks will charge you penalty if your EMIs are not on time. Usually, the post-dated checks are out of vogue now. The only thing is that the bank applies an ECS. But even for an ECS, your bank account needs to be funded properly. They'll warn you at least 5 to 7 or 10 days sometime that your ECS is due on this date. Kindly keep your account funded so that the ECS does not miss its due date. So you need to understand that the penalties are on the higher side. Then analyze how much amount you need. As I said, you should not be taking an undue amount just to splurge or just to invest in that reason. Then you need to pay off for this, because this loan is meant for your sudden immediate needs. You need to take care of those expenses without hurting your monthly income. So you have to make sure that whatever the EMI is, it actually does not eat much into your takeaway income or take home income, because this is the way you will be living a similar life and paying back also the desired amount to the bank. So then uh, banks will keep on changing their offers every now and then. So if you are having a floating rate, you will be applicable with those offers. Sometimes some banks policies will not allow, even with a floating rate, to shift to a lesser rate if it is available at any given point of time. So choose the right loan according to your needs. So pay attention to some other factors as well, that find an easy lender. The nationalized banks are known to process the loan slow, but their rate of interest is on the lower side. The private players have a lesser turnaround time, have a faster processing, but their interest rates are higher. So check out the interest rates. Uh, as I said, don't look at only at the interest rate, look at the APR. So your borrower will check your history surely, and your interest rates you are supposed to check. So because you are, then what amount you are going to pay, you should be having a total clear picture of that. So then if it is an interest rate method, a reducing interest or a simple interest, you have to be wary of those things. Pre-closure charges, processing charges, I already discussed that, should be aware, also considered for your evaluation in that regard. Then always inquire about fees and charges, because as we discussed in the last session, banks will have some hidden charges. Of course, those are mentioned in the fine print as well. So read the offer document very clearly before you sign on the dotted line. So the most common fees are the loan processing fees. They call it administrative fees also. Sometimes the application fees also. The penalty charges on late payments, prepayments, and EMI bounce charges. So loan is not exactly a very lucrative territory, just like credit card is not. But if you can play safely, you can solve your immediate needs as well. If you are not prepared for that, you can solve your needs as well, and you cannot hurt. You can escape scot free without hurting your future take home income. Of course, future is still uncertain, but you have to take a calculated decision based on this. So have a clear understanding of all those things, all those penalties, all those charges, all those fees, because even a small amount of penalty can add to hundreds of rupees to your cost of loan. So all those additional charges are to be taken care of. Then if you want to repay the loan at your convenience, your flexibility of tenure should be there with your lender. So look out for all those things, all those flexible repayment options. You can actually work out the tenure by increasing or decreasing your EMIs. As we discussed, that if you increase your EMI by 10%, does the lending bank offer you that facility of flexible repayment? Does it allow you that? Make sure that you know of all these things. Then your total interest outgo, total principal amount ago, or the total amount owed should be the one which is very important. So those who have lesser amount of income, usually not true for doctors, but then in today's times, you cannot be sure. You opt for a reduced EMI, so that would mean a longer tenure, of course, and that increases your interest part as well. So if you can spread your EMI over a convenient period which is suitable to you, you can actually be assured that you will not be defaulting on the loan part. Sometimes we are tempted to take a loan because it is so freely and easily available, and that is where actually we commit a mistake. So don't choose a loan just because it is freely available. Choose as per your need, so that you are not afraid of going into the future with that. So when we are discussing personal loan, it is imperative to discuss a branch of personal loan, doctor's loan. We all know that doctor's loan is also an unsecured loan. It is kind of a personal loan for doctors. But then again, this is a product that comes under different headings. We'll discuss those. So again, these are collateral free loans given for expansion of business, equipment upgrade, upgrading of clinic, and much more. Then these also come with a faster disbursal process. Repayment schedules are very flexible and competitive interest rates, because they believe, or their actually mission statement is, we honor the doctors, we honor the life saviors. So it is our privilege to serve you better. And they know that doctors are the least possible defaulters when it comes to loan. So they always have a very lucrative set of pricing or interest rate for the doctors. It is actually for all the professionals, the medical and the dental, of course, who require instant access to finance. So what are the purposes? The broader purposes, there are 6 or 7 actually. So either you need to meet your expenses of professional requirement, your development of clinic or clinicum residence, nursing home, or pathological laboratory, then purchase of any medical diagnostic equipment or any OT setup or any other equipment that you need for your expansion. Then any office equipment like computers, fax, air conditioners, or your furniture. Assets like ambulance, or expansion, renovation, or modernization of the existing premises, or clinic or nursing home, or maybe working capital requirements, including stocks of medicine for doctors. So these are a few categories they actually deal in when it comes to giving the loan to the doctors. So what exactly does it consist of? It is a collateral free term loan. Minimum usually is 5 lakhs, maximum goes up to 35 lakhs. They have a doorstep service. Many banks are offering this thing. Minimum documentation, quick processing, and the time period is 12 to 48 months, 1 year to 4 years. And they say attractive rate of interest. They never mention the rate of interest in the offer document usually, because that is subject to conditions. So these are the figures actually. The red bar or the maroon bar is actually concomitant with the IndusInd Bank. So these are the figures from IndusInd Bank. Rate of interest is fixed usually, not a floating given to doctors usually by IndusInd Bank surely. Loan processing charge non-refundable, 2% of loan amount. Prepayment or pre-closure is 4% plus GST. Delay of payment is 2% per month, which means 24% annually plus GST. No due certificate nil. Duplicate no due certificate 200 plus GST. Charges for dishonor 500 for per ECS. Then repayment mode 500, duplicate statement 500, loan cancellation 5,000 plus applicable taxes plus interest for the period of loan utilized. Imagine the amount of amounts we pay. Then duties, taxes as per state laws, legal charges as per actuals, wherever applicable. There is a huge list of charges which we need to pay sometimes on even a simple kind of a loan. So don't just look at the interest percentage, which has been mentioned here, attractive rate of interest. Look at all these figures as well, which are there in front of you. So the interest rates, again, from if the bank is lucky, the bank is giving you an APR. Minimum 12.5, maximum 15.52, average 14.828. So the interest rates can be anything from 11.5 to 36%. As I say, naam alag hai ye bhi personal loan hai. So it is known to be a doctor's loan. Just to give you an example of this maroon band, it is a figure from IndusInd Bank. So the journal requirement of the journal eligibility factors, again, it is an ITR based. Minimum experience 3 years for PG and 7 years for MBBS. Clean CIBIL, that is the primary requirement in any unsecured loan. Then residence owned or 3 years if rented. Age of doctor 25 to 70. Clubbing of family income possible provided all are doctors and all are running a nursing home collectively, or maybe husband wife as well. Then application form, KYC proof, ownership proof via any of the bills, age proof, your last 2 years or 3 years ITR, bank statement 6 months, your degree certificate and your registration certificate. So all those journal things which we already discussed, just to put in additional the degree certificate and the registration certificate, especially doctors. So the name changes if we come across loans like business loans or finance for doctors and hospitals for infrastructure development. The name will change, but the purpose is same. It is like a old wine in new bottle. It can be the doctor's loan. Doctor's loan can be served like a equipment loan or a business loan or a personal loan for doctors. It can come in this format also, but they all are doctor's loan only, and broadly they are personal loans only. The only thing is that the documentation is again pretty much less for doctors usually, as they also believe that the doctors are the least of the defaulters. So another variant, as I mentioned, equipment loan or business loan. The business loan is a collateral or a security free loan giving to self-employed or the salaried, both. It is possible to be given sometimes. There are individual categories also there, which I'll be discussing in the further slides. So if you require for any business upgrade or equipment purchase, you need these equal installments at fixed intervals. These need to be paid back, in equal installments at fixed intervals, whatever the bank sets them. So the requirements can be working capital, small purchases, expansion. They have different tailor-made loans for doctors, which can actually help them. So benefits as usual, no security or collateral. The maximum tenure for doctors usually is 5 years, professionals 4 years. So non-professionals 36 months. Usually these categories are given by ICICI Bank. Then simple process, fast disbursement, no documentation or minimum, attractive interest rates. Nobody mentions the interest rates over here because they're all subject to vary, and they might offer one interest rate to one doctor, they might offer another interest rate to another doctor. So then convenient repayment option and best after sale service. So funding possible for which ICICI Bank puts it, proprietorship firm or self-employed non-professionals, or a partnership firm, limited liability partnership, private company, unlisted public company, or self-employed professionals and doctors. So who comes under the category of self-employed non-professionals? Traders, retailers, manufacturers, vendors, wholesalers and distributors. So ICICI does not have a separate category for doctors. It offers loan to as a category of business loan. Its differentiator is the business loan. In this, it has covered the doctors as well and the self-employed non-professionals as well. So this is the list for the non-professionals. So what is the list for self-employed professionals? We all know doctors, lawyers, architects, chartered accountants, company secretaries. So one can pre-close or prepay the business loan. Again, the pre-closure charges have to be paid after 1 year of installments. Doctor's loan or business loan by ICICI does not let you close it before 1 year. They want to earn some interest before you actually close it. So the applicable pre-closure charge is 5% of the outstanding loan amount plus GST usually. So the basis of business loan, audited financial sheet, banking relationship with ICICI Bank or other bank. Since this is the list by ICICI Bank, then the GST filed, ITR filed, business turnover, competition of income, existing any home loan or existing auto loan. So you can actually be served by those purposes. So at this point of time, I'll give you a third comparison after IndusInd and ICICI Bank by a Bajaj Finance FinServ loan, which comes exclusively for doctors. सबसे पहला लोन जो डॉक्टर्स के लिए स्टार्ट किया था बजाज ने स्टार्ट किया था एंड दिस वाज लॉन्ग टाइम बैक आई थिंक एज गुड एज 18 or 19 years back. I had started my shifted to new clinic. Yes, I had almost shifted to new clinic in 2003, and because when I first came to know about it through my dad only, of course. So they project how does the, as I showed you, how does IndusInd project, how does ICICI project. Let's see how Bajaj FinServ will project. That is the reason I am giving you a case study for them also. They say doctors are pressed for time, so their requirements for life goals should be quick and convenient. They should be actually taking care of those things very fast way. And then they are giving the loan for doctors. What are the requirements they are mentioning? You can plan for your wedding, you can dream vacation, you can take those personal loan for doctors. So you can have that money accessible, and they're not giving it as a business format. So this is their differentiator. The ICICI clubbed it with the self-employed non-professionals, termed it as a business loan and expansion purpose for everyone. They have actually clubbed it that you can use our personal loan for doctors for your recreation also, for your personal life goals also. This is the way the companies also, since we discussed differentiators in the morning session of value creation. So this way is the companies also. This is the reason I've given you a separate case study. So then they give out the needs also in their case study. You can fund your children's education as if education loans are not available as such to the doctors. They are easily available as well. But then good quality education can be expensive, especially higher. And education loan comes for higher education only. That is, the interest is tax free, can be taken rebate of up to 8 years, I guess. Yes, 8 years. So then if you want your kids to be professional, you want your kids to be doctors, you or any other professional, you make sure that you use our personal loan for doctors for your kids education. And sometimes, as I said, the loan can be from minimum 1 lakh to 5 lakh to go, they go up to 35 lakhs as well. IndusInd also gave you a figure of 35 lakhs. Bajaj FinServ also gives a figure of 30 lakhs as also. I almost daily basis get a message from Bajaj FinServ for taking a loan. Today I got 2 calls also. So anyways, if you're planning a vacation abroad, doctors are very hard pressed for time. They can't take out their own money for vacation. So please take a loan for vacation. So they give you the same loan in less than 24 hours. So imagine the kind of scenario they're dealing in. So then you can actually pre-fill your details on their website and get a loan amount instantly. So they provide a hassle-free loan of financing a holiday. So what are the eligibility criteria? They offer that no post-qualification experience for super specialists like MS, MD or DM, a minimum 2 years of post-qualification for MBBS, a minimum 5 years of post-qualification for BDS or MDS. So you can't have a starting loan as well if you're starting off your career immediately. Then a minimum 6 years of post-qualification for the other Ayush categories, BHMS, and for homeopathic DHMS, you need a minimum of 15 years. So this is the criteria they have given. Actually, you can plan your destination wedding also with the doctor's loan. Imagine the loan tenure is from 1 year to 8 years. You can pay them back easily at a huge percentage of interest. So then you can remodel your home interior because you're married. Your wife will ask you to remodel your home, or maybe you remodel your home before your marriage. Renovation can be actually exciting. So you don't know how much amount will you need. So take the doctor's loan. So again, adding a new room or breaking down a wall, you can't have a real estimate. So Bajaj Finance FinServ personal loan gives you a flexi loan facility. You can allow for fund withdrawal. Again, this is their differentiator, the flexi withdrawal policy. So we can, if you have not used the entire amount, and you can actually say take up that much amount which you have used, and you can return it back. So you'll be charged interest only on the taken up category, because you will pay interest only on the EMIs, but the principal payment can be made at the end of the tenure. So then access to prepaid amount in case the need for fund arises, or any part payment if there are excess funds. As I said, the flexi facility is there, and those come with those offers. Then they all want you to consolidate all your existing debts into one, because managing multiple debts can be very troublesome. So you can actually combine all your debts into one single loan and manage your finances with ease. So this ensures that none of the EMI is defaulted. Imagine the ways they have to sell their loans. So that brings me to the next category, probably the last one for today. Uh, then we'll call it a day after this. So the loan against property. So it is a secured loan. Of course, the banks and the NBFCs will provide against your residential or commercial property. Since this is against a collateral, this will be at a lower interest rate compared to a personal loan or a business loan or a doctor's loan. And they are disbursed in a reasonable amount of time, which anywhere ranges from 15 to 45 days. It varies from bank to bank, but the average minimum time is 15 days and the maximum time is 45 days. So anyone with a pre-owned property can avail these loans, even if you're salaried or self-employed. And the quantum of loan is sometimes higher than what is available in other options, because this loan is based on the value of your property. Why the demand for LAP is increasing? Because it is cheaper than a personal loan comparatively. Then you can still continue to live in the same property even while it is mortgaged. It is, in other language, the LAP is also known as a mortgage loan. गिरवी रखना जिसको बोलते हैं हम लोग. So then you can use this loan for your medical expenses which are unforeseen, children's education, marriage, or maybe expanding your business. You can do that. So then if you are a customer of the same bank from where you actually finance your house, you paid back, or maybe you are having good loyalty relationship with the lender, I mean the bank, you don't need to go in for the document verification again, because as I said, the bankers are almost on the verge of the say distributing out the loans, because this is their primary profession as a banker, to distribute loans and to collect interest. So it is a boon. If you have a property in your hand, it is a boon. You can actually be escaped from all those high interest rates which are there. So sometimes people need money for expanding their business. We as a professional also need sometimes, and we don't want to use our assets for that purpose, which are there in our bank, or maybe which are pledged, or we don't want to break into our investments, which is a wise thing sometimes. Then sometimes you have medical expenses like an expensive surgery, maybe for higher education to foreign universities. You actually can take use of your LAP. So like a home loan, LAP or the mortgage loan is also at a low cost EMI, and time period is 15 to 20 years. And low interest rates will actually dilute the repayment burden. So then there are a lot of other advantages as well, that the loan against property, firstly, it needs to be against for a legitimate purpose, which you have to specify to the bank. If it is for a higher education, if it is for a say, expansion, you need to make sure. Sometimes some banks will need paperwork properly for that. If it is for your business, they will need a invoice from the seller if you are expanding it for that reason. Then there are so many other advantages as well, that if your property is of higher valuation than what it was at the start of the loan, you can take an additional loan as well if the property is valued high. So then Otherwise, you have to pay, furnish your documents like a credit history, like a repayment capacity, your property's marketability. Those things will have to be assessed by the bank. As I said, you can opt for a top-up loan as well if your pre-existing home loan is done with, and if you have a good outstanding balance or a loan to property ratio is high, value ratio is high. So then you don't need to actually go in for a fresh property appraisal by the bank because it is already a mortgage with the lender. So there are few aspects to LAP also which you must know. The loan repayment part, since loan availed can be on the higher side, it is important that you fulfill all the criteria that is needed. And the minimum criteria is that 12 months are needed for the EMIs to be paid, and usually the maximum tenure is 20 years. But again, this varies from lender to lender, but on average 1 year to 20 year is the tenure. Then the property valuation part, because it is against a collateral your property, there needs to be a proper valuation by the bank. They will actually check for that. Is the reason they take 15 to 45 days for this purpose. They'll evaluate it on a fair market basis, and not the past value, not the future potential value, but they will check out the current value. And usually the 50 to 60% is the range they will give you the loan upon the market value of a property. If your property is in the market value is for 1 crores, they will take they will give you loan maximum of 50 to 60 lakhs. So the loan to value ratio has to be checked very clearly. Then ownership of the property, uh, it has to be sure that you are actually the owner. The paperwork will be verified from the, say, municipal corporation or the patwari or whatever, wherever the documents of the same can be verifiable from the government end. You need actually, if there are multiple owners of a property, they also need to be a part of the loan and meet the criteria. Then you can't take a loan that yes, I am one of the co-owners of the property and I want a loan. But all those people, those who are there, they also either have to be guarantors or have to be co-owner of the loan in that regard. So then as the tenure is of the longer period, the EMIs are spread over many years, so the rate of interest is lower as well. So the monthly repayment burden is not much in that regard. So the repayment capacity, again, your CIBIL score is also important in this. Sometimes they'll check your income statements, your ITRs, all those things, and then they can give you a loan based on that. So to sum it up, the loan against property, it will offer you great flexibility, lower interest rate, higher loan amount, and a longer repayment tenure. But these are advantages than personal loans, surely. But if you default on paying back your EMIs, remember your property can be confiscated by the lender, and they are transferred to the lender in that regard. So we end our session today here, and we will start from the gold loan in the next presentation. So let me just go through the desired things. So thank you so much for your patient hearing to this session 2 of the choosing the right loan for your needs. This is my YouTube channel. This video will go on YouTube on either 4th or 5th of June. It is a Thursday or a Friday. And you can check out this on YouTube if you missed out today's session. So this is my social media presence by the name of Dr. Bhavdeep. The page is by Dr. Bhavdeep Ahuja name. So my email, phone number, and website, you can get in touch with me. Of course, do message me before calling. My finance article series, many would be coming in the first week of May, surely. And you will get ample things to read in there. So please do send me your valuable feedback on my number, bookies and brickbats. Both would be welcome in equal measure. So thank you for your patience, and I stop my share for the question answers from you. First, I'll be taking up from the chat, and then I'll be taking from all of you, whatever it is. What is PDC? PDC is post-dated checks, Dr. Divya. This used to be a fashion in the past, but now ECS has taken over these things. Okay, how to improve the CIBIL score? The best way to improve the CIBIL score is not to let it deteriorate. If there are issues with your lender, they always give you a CIBIL clean. For example, State Bank of India has launched a CIBIL clean offer these days. You can settle your account, whatever the conclusion you reach, and you can improve your credit. They say that the records are washed up every 6 months. This used to be in the past, but yes, there's still CIBIL will have a default history if you have defaulted in the past on any account. Still there. Maybe your score will improve after 6 months of your settlement, but that blemish will still be there, and lenders will be wary of that red flag in your CIBIL score. But yes, the best way is to improve the CIBIL score is to not let it deteriorate. Okay. Thank you, Dr. Divya. Thank you, Dr. Ajay. Dr. Harshada, sir, will it make any difference in the loan if it is opted from established banks like HDFC, SBI, or banks like IDFC First Bank? You look at all the criteria as I mentioned, the tenure part, the interest rate, the APR, the other foreclosure charges, which suits your sensibilities, which suits your unique situation. Then sometimes the amount is a concern. HDFC might give you 20 lakhs. The IDFC might be offering you 30 lakhs, and your need might be 30 lakhs. Maybe a little bit extra interest is there, but then it depends upon what your requirement is. So all those factors that I discussed in the last presentation and in today's session as well, all those factors, what suits your unique situation will make you choose the lender. It does not make any difference whether it is an established bank or a private bank or a nationalized bank. The main thing is if you are taking it from a NBFC, which we'll discuss in the gold loan, because there are a lot of private players in that. Mannapurna gold loan and all those, many are there which are offering. In those cases, you have to check the credibility of the lender, because if you are buying taking a gold loan, you will be mortgaging your gold, or you'll be keeping your original gold with them. If the lender reputation is not good, there are a good amount of chances that you will not get back your original gold. They'll be forged sometimes. That does happen. But when it is like a loan against a property, of course, you are living in that property, that cannot be altered. So you have to be wary about such things when you're taking from NBFCs, especially like a gold loan, not for the other things, I guess. For the other things, the criteria as I mentioned, your situation, you are the best judge. What suits you more? So I hope you get the answer. So can the CIBIL score get affected if we don't use a credit card? If you took a credit card, I told you, make at least 2 to 3 transactions, pay them on time, so that you at least generate something on your record. There are some green flags there. Yes, this was the amount due. This was the total amount paid back in due time. So that if by chance in future you need it, the history should be there. क्रेडिट कार्ड लेने से हिस्ट्री नहीं बनती है, क्रेडिट कार्ड यूज करने से और पेमेंट करने से हिस्ट्री बनती है. यू यूज अ थिंग एंड यू पे इट बैक, दैट ओनली क्रिएट्स योर हिस्ट्री. So CIBIL clean, yes, CIBIL clean. SBI has launched a CIBIL clean. They'll message you if you are a SBI customer. I get this message because I am a SBI customer. I am a defaulter of SBI in that regard. I mentioned in the last session about that one 500 rupee default, which as a matter of a principle, which has now escalated to 10,000 something and then reverted back to 7844. They keep on doing that. That figure keeps on jumping over there. So it is their issue what they want to do in that regard. So yes, only the SBI has launched it in today's time. So Dr. Divya, sir, apart from quick and higher chance of doctor's loan approval and lesser documentation, are there any other advantages? Dr. Divya, unfortunately, no. The only advantage is that the amount is on the higher side as well. Apart from these things, what you have mentioned, the amount is on the higher side, usually up to 35 lakhs as well. And the advantages are not there because it is a personal loan. It is like a old wine in a new bottle, as I said. So naam alag hai, business loan ho jaye, personal loan ho jaye, That is the reason I gave you 3 case studies from IndusInd Bank, ICICI Bank, and Bajaj Finserv. They all are personal loans, just packaged in a better way that we care for the people in the white coat. That is the only their say presenting phenomenon, or say differentiator, that you present to the market. For example, as we discussed in the morning session, all of you, as I said, 80% of the things you are already doing it without knowing that those are differentiators. The only thing is that they need to be done in a little bit minute manner. So similar way, the loans are also the same, especially the personal ones. They're just packaged nicely and promoted nicely in a different manner. So the branding, different packaging does make a differentiation. Sometimes yes, HDFC डॉक्टर्स के लिए लोन देता है, ICI भी देता है, SBI नहीं दे रहा, फॉर एग्जाम्पल, जस्ट प्रिज्यूम. एंड सिमिलरली बिजनेस लोन ICICI दे रहा, इंडसइंड नहीं दे रहा, HDFC नहीं दे रहा. People are not very aware about these things. I am giving you the basics. Yeah, business loan or doctor loan में क्या फर्क है? People ask me. This is a question I get asked many times. What is the difference between a doctor's loan and a business loan? You saw it all today, all those who have attended. There is absolutely nil of a difference. It is just a differentiation product from a different bank. Not everybody would be giving out a business loan, but then not everybody would be giving out a doctor's loan. What ICICI has done smartly is that it has included the self-employed non-professionals as well in the business loan, because the requirements are the same. The only thing is that they promote doctors because they know that the doctors are the least defaulters. But when it comes to self-employed non-professionals like traders or vendors, the default chances are more. So there are no other advantages as such separately. But yes, higher loan amount and sometimes a differentiation factor. That's it. Okay, Dr. Anu, thank you. Same thing with me. SBI credit card, but I haven't used it also. Now the account is closed, but CIBIL score is getting affected by that. So I told you in the last session also, I don't know whether you attended it or not, but yes, using a credit card and paying it back will make a difference. If you just have the card and don't use it, that will sometimes actually create a negative score, not by a bigger number, but maybe by a smaller numbers, maybe 10, 20, 25 points as well. So I mentioned that that is still there in the group. You can till that day, the Zoom settings were intact. Now the Zoom new version has actually changed the setting. Even my virtual background was not available in the morning. So I rechanged the version. I just took some pains and I was able to change the virtual background in evening session. But you can watch out that session that is still there in the MPG group, in the FB MPG group. And now for those who have missed out the session part 2, wait for 4th or 5th of June, because the scheduling has already been done for the various sessions. So I can't change the date, of course. So any more queries now that I have answered from the chat? Any more queries, please unmute yourself and you can ask. Dr. Ajay, any queries that you need to ask from today's?
No, sir, it's all clear.
Okay. In the next session, I will be discussing about gold loan. Then I'll be giving you a comparative first. Personal loan versus gold loan, which to choose, and loan against property versus loan against gold. The lag and the lap comparison, which to choose. Obviously, when it comes to personal loan versus gold loan, we know who is the winner, clear winner. Because you don't know about the gold loan part, you'll be getting to know who is the clear winner. But when it comes to the picking the choice between a lag and a lap, the loan against gold and the loan against property, who is the winner? And then I'll be discussing in brief, so that is a very vast topic, home loan, education loan, a little bit about car loan and mudra loan. And that's it. And then we should be able to wind up this session. Maybe the next session would be slightly longer, 1.5 hours or so, but I'll try to cover up all those things in that session only. I'm not going to take a fourth part for this loan segment. So in the case study, even the bank did not accept doctor's loan for dentists only after 5 years. Even they know dentists need more time to settle new clinic than medicos. Is that what it means? Uh, uh, Actual thing is that they'll had to keep something different from their competitors. The Bajaj FinServ is famous for giving loans to doctors, but if you remember last year in COVID situation, they churned out a loan for doctors, and in that loan, conveniently, the dentists were missing from that list. I think it was in June or July last year, July, I guess. I don't remember the exact loan name. I'll search out for you in the next session. But the dentists were clearly missing. There was a lot of hue and cry over social media that dentists are not even bothered about that regard. But then this is the scenario. We need to understand that we are still better than the homeopaths and the Ayush category, who need a 10 to 15 years sometimes. We are still needing lesser than that. Yes, APR is the game changer. People are not aware of it. People actually look at the interest rate part. They don't look at the annual percentage rate, because that is actually based upon the total amount owed. And we just look at the interest kitna hai, utna kitna hai. We don't bother all those things. If somebody asks me a one line question, sir, ye loan loon ke ye loan loon? Now, can you expect me to answer that in one line or two lines? No. But then if I start divulging everything, people are not interested. उनको चाहिए एक spoon feeding वाला answer. उन्होंने बोला था मैंने ये कर लिया, because we are not ready to scratch our brains more. That is the problem. So why the difference in the number of years of experience for different health professionals? The risk factor, Dr. Divya, the risk factor. MBBS का रिस्क कम है, डेंटिस्ट का उससे कम, उससे थोड़ा ज्यादा है, आयुष का थोड़ा सा और. Again, this is based on whatever the say feedback they get from their advisors. They are not themselves good enough to judge it. So this is the way actually they judge it.
Sir.
Yes, Dr. Sabyasachi.
Sir, please you once repeat the APR. This is not so much clear to me.
Fees plus charges divided by fees plus the total money paid divided by the number of years into 365 into 100. I'll put up the formula in the group itself. Don't worry.
Okay, thank you.
Yeah. सुबह मैं अंडरस्टैंड कर सकता हूँ, आप लोग नहाए नहीं होंगे, तैयार नहीं होंगे, अभी सभी वीडियो बंद करके क्यों बैठे हैं 9 बजे? If it is an interactive scenario, you should keep your videos on. All of you. I sometimes feel that I am talking to walls because it is all blank screen. Dr. Anu has already left.
Good evening, sir.
Good evening. So any more queries? Any more queries, or I leave you for your dinner if you haven't eaten till now? Okay. Anyways, the next week schedule is Tuesday evening or morning. I'll let you know. The free group session this time on medical legal negligence, most likely this topic. The Thursday morning subah ki chai in the paid group on managing profitability, how to increase profitability in your practice, and the Friday chai pe charcha, of course, on the loan part. And before we shift, then we shift to our normal schedule of once a week or twice a week from May onwards. That is the last week of April. I hope I have compensated for my 3 weeks absence by a huge margin. I was absent for 3 weeks in March, but then I think I have compensated more than enough for that in the paid group. So thank you so much for your
by a large.
By
a large amount.
I always want to keep the benchmark high. Always want to.
Yes, sir, you are.
Because that is the benchmark I set, not for others but for myself. Because I should find it a higher one to beat it next time. फिर अगली बार हायर लगेगा तो मैं ट्राई नहीं करता हूँ, छोड़ो. इसीलिए that is the reason sometimes. Okay. Thank you so much for your patient hearing, and do put in your feedback in the WhatsApp group wherever you are. So the feedback is the engine to my success, because that tells me if I'm going on the right or the wrong path. So a few of you feedback is awaited from few of you for the morning session as well. So do put in your feedback if you can. I can't force you, of course, but if you can, please do it. Thank you so much, and we meet on Tuesday. I'll let you know at least. Before. Take care. Good night. Bye bye.
Thank you, sir.
Good night, sir.
Good night. Good night.
Good night.
Oh, yeah.